Hi, so I thought I'd do an update on Armadale Capital, a company that I'm invested in. This might fall on deaf ears at the moment given the current market conditions, and I think obviously we know that they're very challenging. However, the company have pressed on and delivered some fantastic updates over the last month, notably the metallurgical test results and the DFS. And the DFS obviously is a key de-risking step that puts the project economics in front of potential financiers, and it's a significant piece of news for the company. So I'll touch on both these pieces of news in this video. It'll be a short video, but just really wanted to highlight why I'm happier than ever to be invested in the company. As I said, it's challenging market conditions. However, we shouldn't ignore the news that's been issued by the company. So, as I said, the key milestones are now achieved, and this now paves the way for Armadale to press on and become an emerging graphite producer. Now, the metallurgical test results were published recently, and the striking thing about the results were that across the flake fractions, the sizes, the different, the flake sizes of the project, they were achieving 97% plus purities across the majority of the flake sizes. And this is significant when you're looking at natural graphite plays. So the thing about this is the higher purities and the larger flakes command a higher premium and basket pricing. And we'll see some of that in the DFS in a moment. So this sort of sets the Mahenge project for Armadale, at the top end when you look at peers. And, we've seen some other graphite companies, mostly Madagascan based, such as Zero Resources and what have you, struggling slightly with graphite pricing. This is because they produce generally lower product purities, and therefore it's harder work for the end consumer of that graphite to then transform it into, say, for example, battery product, which would be 99.9% purity. So a large proportion are in the medium flake size category, and this is great because this is the ideal product flake size for the battery sector, and we know that Armadale are targeting the battery sector. That's their main objective. However, they've got some of the larger, the larger flakes and jumbo flakes that would be more suited to the expandable sector. Pretty much like Walkabout Resources are planning from their side. That's a great project, by the way. And they're actually currently in the process of raising financing, and it would be interesting to see how that goes given the current market conditions. However, these projects, just such as Walkabout and Armadale, have excellent economics, and therefore you'd think they're going to be at the top of the list if people are going to be putting in relatively small amounts of capex. So, as I said, the high purities for natural graphite in demand has reduces the upscaling cost to achieve 99.9% battery products. So what we've seen is China and India both trying to reduce their synthetic graphite processing, which gets you the 99.9% battery product. It's got environmental issues surrounding that. Obviously, both countries and other countries are trying to reduce the, if you like, the effect on the environment. So therefore, if you start turning and looking to natural graphite, then Africa is certainly a good place to be looking. And there's been a few press articles on Africa as being the next, if you like, emerging graphite centric country to be producing graphite for consumers such as China and India. And the higher the purities, as I said before, the lower cost it is to get to the end product. So this puts Armadale in a very enviable position if you stack them up against peers. Now, the DFS was delivered yesterday, and it was a robust study, which notably delivers a very low capex. And obviously, in challenging credit markets, financing markets, low capex is going to be key. If you look at other mining juniors with fantastic projects, but needing high capex, though some of those companies might be having to defer those financing discussions for a while in the current market climate. However, all of these junior miners with top projects tier one projects and quality product, will eventually get funded because there is going to be a need for the products. But that timeline may have to be adjusted slightly. However, the DFS for Armadale was excellent. It was fairly in line with the scoping study. I think some expected the project NPV to come out a bit higher. I think what's happened here is the company wanted to meet the deadline and get the DFS out, and they've already alluded to the fact that actually they're going to be going through like a phase 2 modelling of the DFS to look at the higher grade zones and factor those in, which I think will have a positive impact on the NPV. However, the project economics as they stand now stack up incredibly well with a 91.2% IRR and a low 38.6 million capex. And when you're looking at financing, that sort of figure isn't unrealistic. It's an exceptionally low capex project with a 1.6 year payback, and it makes obviously the project, I think, attractive to financiers and other project partners who are looking to get involved with the project. And the project economics themselves are actually based upon just 25% of the overall resource. And we've got a 358 million NPV there, which is great. Now, one of the things that people can comment on is the basket price used in DFSs. And this is the same for all graphite companies that have produced DFSs. And, there's always a bit of uncertainty around basket pricing because the graphite pricing market isn't really like a very transparent or spot-based market. So therefore, whereas something like gold, you can see what gold's trading at, whereas graphite you can't really find a reference point. However, if you look at what Armadale have used, which is a basket price of $1,179 a tonne, other peers that have produced DFSs and scoping studies are all actually using higher numbers than Armadale. So if you look at it from that perspective, then you've got to bear in mind that Armadale have been conservative here with their price in comparison to the rest of the market, and that should bring some confidence in the numbers. Obviously, there'll be sensitivities to this basket price. So with the higher purities that Armadale have got, if they were to achieve numbers equivalent to what some of the peers have used, such as BlackRock or Magnus Resources, the NPV is going to make a significant move upwards. So I just thought it was worth putting the reference point on there, just so that people know that Armadale have been conservative when you look at peers. The DFS itself was produced by Battery Limits in Perth, and they've got clients such as BHP Billiton. They've got a long list of big clients actually, if you have a look. So the confidence in the DFS, personally I find high confidence in that, and you can see all the numbers there, which are essentially very strong, robust numbers, even from the low cash cost for production itself. So a major de-risking step for the company, and now paves the way for moving forward. So what does it all mean then? Well, from my perspective as an investor, I think Armadale are uniquely placed with one of the highest purity graphite projects in Tanzania. We know China, India, and other countries are going to be looking at Africa to supply their graphite, and this allows them to target the EV sector with such high purities. Where, as I said before, some other graphite producers with lower purities have struggled. It's got robust economics with a low capex that makes, in my opinion, financially are going to be a lot more achievable than perhaps other projects with larger capex in the current environment. And when looking at the capex requirements, the company have got various options available to them across debt, equity, and notably I've put in there royalty options as well, such as H&M did with Orion, where they got the 25 million cash upfront payment for the 2% royalty. That is certainly something that Armadale could look at. And if you think about it, like say a 400 million NPV, if 10% of that would essentially be the capex requirement, And so if you had a 20% royalty, the person providing that capex up front would still be getting a decent return. So I think China have announced a further 2-year subsidies for the EV sector. That was only news that I saw today, and graphite is still the dominant material in various lithium-ion battery combinations for the anode, and it will be for the foreseeable future, regardless of future battery technology, which may or may not look at increases or decreases in graphite. It's certainly here to stay with the current environment we've got. The mega factories are all geared up for the lithium-ion battery combinations they've got at the moment. So therefore, graphite demand, and I've seen a few charts, is definitely slated as going to be increasing, especially because of the EV sector. Africa, therefore, is expected to service this demand as one of the most prevalent regions now for graphite production for natural flake graphite. Armadale have got already offtake MOUs in place with a number of Chinese partners coincidentally, and that bodes well. Now the DFS has been delivered as a de-risking step, and they can move on to converting these to binding offtakes. And I said before, it's a low cash cost, low capex project, a staged ramp-up approach that is sensible in terms of managing upfront financing requirements, and then obviously once they're producing on the lower tonnage over the first 4 years, they can then increase the production and ramp up using the cash flow to expand the plant. So just to summarise really and finish off, obviously the company have come a long way forward in the last couple of years since I've been invested, and I've seen an increase in the share price to reflect that. And for me, a lot of people look at DFS and think, oh, that's delivered now, I'm off. Not for me, because actually there is a lot more to come. And I think Armadale, and to a certain extent, have got this in the right order with no big gaps between the DFS and financing, because there's other things in the pipeline. And first of all is they're looking at the DFS optimization, so they're going to be remodeling higher grade zones. The only reason they'll be doing that is to improve the numbers, so that news hopefully will be coming out very soon, because they've got all the basic inputs now. It's just about doing a bit of remodeling there. Obviously the permitting and the mining license, so that will be submitted. I think from a mining license perspective, there come costs with that associated once you've applied for that. So my suspect is they've left that to the back end to preserve capital, which they've done very well over the last year or so. Conversion of MOUs into binding offtake agreements. This is what we are expecting. My guess is that the DFS was a precursor to that in the end, because the company have got all the costings and therefore can then be thinking about final pricing on those binding offtake agreements, having all the information to hand now. The FEED study to prepare for construction, so this will be something that's been signposted already that will move forward this quarter, I should imagine, and then as soon as possible get to the construction ready phase, complete the financing. As I said, could be a debt, equity, royalty based option there, given the low capex. And once those two things are complete, it's then on to construction, which I think is only anywhere between 10 and 18 months. So it really is feasible that Armadale, if they do things right and get the financing sorted, that they could be looking at being a 2021 producer. We'll have to wait and see. Their delivery has been excellent since the technical director Matt, Matt's come on board. He's done a great job, and we're seeing obviously all the rewards from the contacts he has in the mining sector, because they've got all this stuff done very quickly. And we've had a raft of RNSs over the last 6 months or so that have impressed me incredibly, and I think that the company have got a long way forward in the timeline now, and we're about to see probably one of the most significant years for the company.